What's up, guys? Good morning. Get started in a minute. How's the sound? Should be some light background, lo-fi. I still can't find a really good playlist. Again, all the music that I play during the streams, I guess some of it I might have on from time to time for my own listening, if I'm just trying to really mellow out. But even the best, like, mellow lo-fi is copyright protected. And the trouble with doing a stream is, you know, that is not allowed for. So, good morning. I have the Block's website up right now. I don't intend on like going over this much. There was an article that I thought was relevant. Briefly touch on sort of the talk of crypto Twitter the last couple of days. All right, give me 1 second. What did I just hit? Oh, okay. I thought I just opened up another piece of software. Okay, voice is good, music's good, sound is good. But yeah, so ideally I would have a consistent playlist of non-copyright stuff that could be played on, during the streams. It won't get me on trouble on YouTube. You guys know all the times that I streamed on Block Roots. There were times where some of that music was protected, and they would actually remove that portion of the video, which is a pain in the ass because, God forbid you have a song that's protected playing the entire time, then you got to take down your entire video. Okay, turn this down a little. All right, so good morning. How's everybody doing? What do we have in the chat? Meaver, Kane, CN, Samurai, what's up, buddy? AN, Bahamas, name unknown. Okay, we'll get started in a minute. Just reshared the link on Twitter, so I'll give it a minute or two for people to join in. It is shortly after 10 a.m. Eastern Standard Time in New York. So good morning, good evening, good afternoon, depending on where you guys are. I'm going to ditch the headshot in the lower right-hand corner in a second, or lower left-hand corner, because I don't want it to get in the way of anything that is on the screen. But I figured I'd put a face to the voice and say hi. All right. How many people we have? It's a light morning. Okay. So let's get started. As always, guys, appreciate you guys tuning in. It's Monday. I don't do a lot of trading on Monday. Not to say that I don't trade on Monday. It just happens to be that when I look back at my last few months' performance, Monday is the second to last least profitable day, I guess. It's a profitable day for me on average, but there's not many trades that I've taken on Mondays. It's probably for a good reason, right? Tuesdays, way more active. Wednesdays, Thursdays. I shared the sort of breakdown of my, day of the week performance, and that goes back. I started recording on Edgewonk instead of just using CoinMarketMan. I started using Edgewonk again. So I went over this plenty of times in previous streams. I don't want to reiterate it. But I haven't really traded on weekends. Don't do too much trading on Monday. So here we are. All right. It's going good, man. Thanks for asking, Frankie. Okay. So please hit the subscribe button, hit the like button if you are not already subscribed. As always, none of what we cover in this stream is financial advice. It's important to place disclosures out there. So this stream is done in cooperation, like the previous. Right? It's been a long time now. With Phemex. So Phemex Exchange is a phenomenal exchange if you're looking to trade spot or futures. This is going to sound really shilly, but it's the truth. It's a phenomenal exchange for futures and spot. It's liquid. It offers the fastest execution, really no downtime compared to any other exchange. Obviously, the first response to that is going to be, yeah, well, there's not nearly as many traders as there are on FTX and Binance. And I would say with respect to FTX, that is beginning to shift. If you look at Phemex perpetual or futures pairs compared to FTX, FTX has been a lot thinner recently. You've had some very significant moves on FTX with BTC a couple weeks ago and with ETH this week that did not, were not, they're on their own in terms of price discovery. So, it was $30, $40, $50 below any other exchange at times. And it's probably even less. It was probably even more than that for some of the other moves. But I can't recall off the top of my head which specific ETH plunge the wick happened on. Anyway, didn't correspond to Phemex. If you're interested in trying out Phemex, the link is below. And I think it's also cycling above. So that is tradephemex.com. And there's a bonus associated with that. So if you're looking to reduce your trading fees, there's nothing better to do that than to take advantage of free money. Okay. So not financial advice, in correspondence with or partnered with or sponsored by, whatever works, Phemex. And we'll get started. Everything is good. Okay. So it's Monday. Didn't really do anything over the weekend trading wise. Instead, began the project of doing our soon to be born child's room. I have some catching up to do on the market. I'm on Twitter, sort of keeping a finger on the pulse with things. Let me get rid of my face now. Keeping a finger on the pulse with things. But when you step away for a day or even a few hours sometimes, it feels like you could miss, you could miss a ton, right? It's a fast moving market that isn't moving fast now, but there's always something that's newsworthy that's coming out that seems negative recently. That's the way a bear market works. But this one I think is important to go over. This is a good example of why OPSEC is really important and why even when you think that you're practicing good OPSEC, if you're working with, trading with, using a centralized entity, they can go ahead and spool your OPSEC for you. So Celsius, it's on everyone's radar already for obvious reasons. We don't need to continue to go over that. It's not really my thing. But Celsius creditors face fallout from U.S. bankruptcy disclosure process. And normally I don't really care to go over this shit, but they put out an entire list of, I think it was like a 14,000 page brief. So as part of the lawsuit and the bankruptcy filing, whatever, you could tell I don't exactly keep a tight finger on the pulse with this stuff. But it basically named and doxed everybody who ever used their platform. And now, so anyone who's ever used their platform, so there's a lot of like this interesting because there's a lot of like BTC maxis. There's a big uproar right now on Twitter, for a multitude of things, but a lot of Bitcoin maxis were found to be using Celsius and, having stakes and positions and interests in things other than BTC. So it's kind of contradictory to a lot of their rhetoric. But anyway, there's a list going out also that labels people that we're finding out actually weren't even involved, and it's not their portfolio, and it's not actually them that have used the platform. So I would just be careful in sharing anything. And I'm not saying this because I'm on Celsius by any means. I managed to dodge almost all this shit. I just never trusted anything with respect to yield or any of these platforms. Like I trust my hardware wallet. I trust a few exchanges. And yeah, that's kept me from probably capturing some upside, missing out on opportunities. But clearly now in hindsight, it did way more good than it did bad. But there's an entire list going around of people that are on the platform, have used the platform, and you could see how much money some of these people lost. I mean, it's quite incredible. I think the guy at the top was like 40 million wiped. But anyway, this is like all the rage the last few days. Everything is, things on Twitter have like a half-life of a few hours. Whether it's the Russia-Ukraine conflict, whether it's Celsius, which has obviously been persistent over the last few months because of the entire market blow up. Today it's Bernanke, I guess, getting the Nobel Prize. For those of you that are too young, Bernanke was active, I think, from 2006 to 2013, 12, 14, I don't know. But anyway, not really interested in this beyond that, but it is a list that's going around. And it is a reminder that, if you're on a centralized platform, that this can happen. So let's get rid of that. The Block is a really good website, by the way. It's a really good website. They have some good data, but I'm not going to go into this too much. But the data that they show is actually really good. It's not good for the market, but they have a bunch of spot market data, futures market data, on-chain stuff, and this is free. So this is cool. This is irrelevant right now. A lot of people are talking about total market volumes and spot volumes and future volumes compared to where we were historically and how much things have dropped. And it's like volumes will come back when they come back. You don't really have to focus on this shit. You get one look at this every few months and that's it. Okay. So let me just check the chat real quick if there's any questions and then we'll get started. Done talking about Phemex. By the way, Phemex has probably like 10 promotions going on right now. So if you are signing up with that link, take advantage of more than just the trading bonus. All right. Just looking through the chat. Okay. QNT. Yeah, we'll take a look at QNT. So I have a watch list up from last week. Let's throw this up here. Okay, so just a few things really quickly. Most important thing, obviously, still is legacy markets. Legacy market, crypto market correlation, BTC correlation more specifically. It's still positive. It has somewhat abated, as I've said, in the last few weeks. So there's been more sort of idiosyncratic behavior. But any major shock to legacy markets, whether that's to the downside or to the upside, translates it's not equally in crypto, it's even worse. So this is something to keep an eye on. Obviously, this is a really important week because we have CPI coming up. So CPI on Thursday, keep an eye on that. I think that obviously the market is coming to a point, literally tightening up to a point, and CPI is kind of right at the, I guess, apex of that point. So here's where CPI will be. And you can see how tightly we're funneling over the last, more specifically over the last couple of weeks, but over this entire structure. So that lines up kind of nicely with something that could have a significant impact on markets. As far as the S&P goes, I'm bullish in the short term if we're able to reclaim this, 36, sort of 37. It's like 36, 80 and above 37 region. High time frame market structure, having trouble around this now. So this is a weekly, going back a couple weeks ago, we talked about this high time frame structure right here and how that was pivotal, who knows what that means, how this would be pivotal. This was a multi-week composite value area high. This is a weekly level, a key contextual level, multiple reasons. Market re-accepted back within there, and you're just looking at targeting the lows at that point. Bulls need to see the lows hold, obviously. So it's not to say that, legacy markets do a lot of chopping around levels. It's not as like, technical one bounce and done kind of thing as a lot of times crypto might offer. Crypto we might do that and then come back and revisit the level over time. But legacy markets can chop around and give you multiple fake outs and, multiple advances that might look like acceptance only to reverse shortly thereafter. So it's kind of like if you look at this structure right here, kind of in a similar position back here where the market, we're in price discovery to the downside, lose a key level, look like we put in, the next major pivot that most of the market is leaning on at this point as the low to hold. We spend some time chopping around that level for a few days and it's kind of, it's up in the air as to whether or not this level is going to hold or whether or not we're going to get another bounce from here and put in a larger low. We ultimately did put in a low. So just be mindful. I wouldn't overly commit to anything where we are. We are considerably off the highs. We're still around this local level. Acceptance below here, something like a clean break below this sort of 35.50, 35.70 region probably opens up to 34s, 33s, but I wouldn't go selling anything too aggressively while we're around here. Be mindful of the S&P, obviously, because if the S&P puts in a larger move to the downside, I don't think that the crypto strength that we're seeing, I don't think that that's going to hold up. I think that, that's able to hold up for the sort of these intraday, these periods where we're chopping and the market isn't doing anything majorly. But I think if the S&P was to lose its, now major lows right around October 3rd, October 2nd, or excuse me, this is the daily, but this is, that was a weekend, that crypto would follow. So eyes on that. If we end up retaking that 36.70, 37 region and it looks like price is holding this level, maybe we have some kind of double bottom at play and then maybe you're targeting 39 and those, that kind of move should provide some kind of tailwinds for crypto. But I don't want to dwell on the high time frame stuff. There's not a whole lot going on, honestly. We're probably at, let's take a look at, just really quickly, BTC. We're at, prior all-time high is right around here. We lost the weekly low that was put in a slightly lower low weekly low. I mean, if you combine the daily and weekly levels, I think you get a better idea of this zone. So this is the lowest daily close so far, lowest weekly close. That was the initial lowest weekly close of this pivot. So this 19,329, 18,500 level has been the zone to not really get too aggressive selling into. But I think the attractiveness of longing off this level is also not really there anymore. Just because how messy things have gotten around here and how tight they are. We're really compressing. So I think that something like this, so these sort of running diagonals that you see, I think something like this diagonal will be actionable because of the way that we are compressed. Oh, that's way too big. Whoops. So this compression, this is like two composites now in one. Because of how tight we're getting over here, this running diagonal, I think that if the market is able to break out of this, and it takes us above a pivot that we had from a prior stream, right around 20,400, 20,500, I think if you break outside of that, that's something that I would get long behind. Price discovery outside of this level, I think it's such an obvious level that probably triggers a significant amount of activity. And if the market has floated up to that from this, I don't think that it would be something that would just fake out, but obviously watch for fake outs outside that level. And that would probably be around, again, that would correspond with that prior level that we'll get into in a second from a previous stream. These highs, right? Like right into this gap. So acceptance over time, right? Market's still moving sideways. And then if we're above like 20,400, 20,500, this just looks like it's starting to float upward and maybe we start to see, more significant expansion after that. But historically, let's just look at volatility. See where we're at. We're not at weekly lows yet. I mean, we're definitely low when you look at daily. So things are definitely getting compressed. I mean, you don't have to look at an indicator to see that. But it's not as compelling to, there's no real reason that you've had to change your mind if you're already in position, right? If you're building a thesis off of this low holding and you don't think we're going to get a further plunge, then there really hasn't been much of a reason to change your mind unless your idea is that it should have left this level faster. But also there's, again, wouldn't want to short this right here. The idea of like never short a dull market, that's more in bull markets, but just the way this is behaving, I think it's dangerous to be confident in anything right now until we get some kind of clean break below 18.5 region outside of this composite, or clean break above. This kind of range, this kind of compression, it's just building stops on both sides. And we've been moving sideways long enough now for almost, we're going on a month. So any kind of peel above 20,500, any kind of peel below 18,500 probably triggers a significant amount of activity just from people that got positioned from this structure. And I think that those are attractive. Those are worth waiting for. Like, you're not going to miss out if you miss this 1,000-point move, and you're not going to miss out on a good short if you miss this 1,000-point move. And I do think that if this low ends up, breaking, and we get some kind of acceptance below this level, I do think it's actually a decent short, because I don't, as I've mentioned in previous streams, I don't think that if we get a break below here that accepts, that this is going to be just a tap of this low and then a reversal. Could be wrong. Could end up shorting the acceptance here right around 18.4, 18.5, and then, holding on through this low and then end up closing this out at break even, or scurrying to get out because it does snap back. But I think that at this point, with this kind of buildup, that this moves us into, again, as I mentioned previously, we're bottoming, but we put in the Q4, we put in the low of the structure in Q4. So who knows where that is, but I can't imagine that after this kind of compression that it's local. So, local meaning we break below 18.4 again, accept below here, and then we just stop again at like 17. But we'll see. I mean, we'll see the flow when we actually get to that point. I don't like to make too many predictions about what kind of flow we'll see, for obvious reasons, right? So high time frame, I think it's not a whole lot to talk about because nothing has really changed. Let's look at something more interesting. Okay, so the last few weeks, so starting with the weekly TPO, we accepted back within this multi-week composite. So, we've been talking about this composite now for over a week. Accepted back within this multi-week composite. My idea was that accepting back within here was going to lead us to a naked point of control, which you'll see we actually tapped, but ultimately the lows of this range. So as you can see right now, we had over the last couple weeks had a drift up of the POCs, caught a significant amount of positioning at this high, and now we rolled over, and now we're accepting back within the structure. And if we fail to, I would say, if we fail to get back above this, locally, this 19.6, 19.5 region, and maybe you end up tapping this low volume node. If we fail to accept, though, I think that you're just seeing in progress ultimately something like this, right, where we end up coming down to 18.8 and retesting the low of this composite. On the daily TPO, there's a bit more detail. So again, going back to the last stream, the idea was that a breakdown here and acceptance back within this range would lead to a first target here, and then just like I just said, ultimately the low of this range. We are right now putting in like pretty responsive moves off of every effort down, but we're still drifting lower, hanging out below where most of the activity is coming in the last few days. So the best case scenario is pretty obvious with that we end up reclaiming, like if we combine the last 3 days, because there's enough value overlap. I mean, it's clearly a bunch of value overlap here. That's a composite. But then with this kind of day, the same thing. There's enough value overlap to form a composite. So if we combine these, you get something like, and what I'm going to do is actually, I'm just going to put a new line. Actually, hold on one sec. Just want to make this as clear as possible for the stream. So put a box here, but we'll change the color of this box. Actually, it'll be darker because it's on top of another box. So that is the last 3-day value. Okay. So what I would say is, again, it lines up with what I just said looking at the weekly TPO. I would want to see that, so there's a poor high right here. So if you zoom in, you can see that this high is a poor high so far. So there's 3 boxes up here. Poor high prior day, decent high up here, but a ledge. So these highs are, a lot of times these are pretty decent targets for some kind of stop run. And being that these line up, I mean, this is good target for a stop run, but it's also a sign that the market is just rolling over with a lack of momentum, right? It's not the case that the market needs to tap into liquidity, get rejected before rolling over. These instead are just beginning to die out as they move up. So usually when you have a market that taps liquidity, if you range and then spike, then you get your failure. These instead are showing just basically leaving equal highs and then rolling off of them, right? No tap of that, of those prior levels established. So poor high, ledge. These line up nicely with this value area high. I would want to see more than just price being up here to get long at this point. I would want to see that price is above these highs. So we'll say 19.6 to be safe. That we're above there and we're able to hold this level. So some kind of sold and hold of 19.6, 19.55 to show that it's more than just some kind of stop run that's taking place here. So cleans up this high, and then is able to find footing above 19.55 or 19.6, whatever is best for you. Or me, right? Depending on where it happens, right? We could flag up at 19.6, we could flag up at 19.55. This is just a general area to look because at least you want to be above yesterday's highs because that's a poor high as well. So more than just a stop run. And then if we get that, so if we have something above there, sold and hold, I think the next most obvious target are these single prints right around 19.72, 19.76. And then you have some ground to cover from there, at least on the long side. You know, you have single prints from this structure down. If we're able to hold that level, so if price is able to reclaim this consolidation, you know, this is a pretty smooth move to the singles. And then you have a naked POC around 19.950. So the idea is on the way back up, these levels should act as resistance if we're going to put in a move back up to 20,300 or whatever these highs were, 20,500. So this is just local, right? These are some local levels, but I would say in this move down, right, you had a decent response off the naked POC. It's like I said, the lack of excess at the highs is a sign of momentum sort of falling off as well. You know, no tap of liquidity of the prior days, no effort up. We are back within a prior, you know, composite. So let's say we get that failure above this level, we don't get acceptance, and then we're back within here. I would just, again, start assuming that this is going to rotate back down towards this composite value area low around 18.8. And at any point, like, I think that, you know, you had a response here, market balanced slightly back within prior value. Now we've had another response here. This should be like, if you're bullish, you want to see that this was the grab, right? And now that the market is going to rotate higher, if we continue to just roll towards this low, right? So if we're back down, let's say today's session, we end up rotating back down towards 19.2. You have a tap here, responsive activity. You have a tap here, responsive activity. You shouldn't have to hit this again. So a low initially into the level, low, market balances within the prior day, another low, so another tap. If you're looking at this structure, it would be like a 3-drive structure, right? And imagine that we're approaching that 3rd drive again, and the market is kind of leaning on the idea that this is basing out. I think that if we're back down around 19.2 and we're going to press today's low again, that a break of today's low, probably it's probably decent trigger criteria for a move back down to 18.8. Hopefully that all makes sense. Because we are back within this range, and this range is, again, we were in this range for some time. And ideally you should have held the top of this level, this 19.6, 19.5 level. And it looks kind of just like it's just drifting down. Like it's not, you see responsiveness on the low time frames. So this might make it a bit clearer. So responsive, so spike down, reclaim that gap, responsive, reclaim that, or initiative, responsive. And it's not necessarily that it's, responsive. It's just outside of prior value, and there is a sort of inefficiency that's filled in these aggressive moves. But you want to see, like I said, that's kind of, at the point now of 1, 2, 3, 1, 2, 3, you want to see that this should be it, right? We shouldn't continue to press these lows. I think the chances are that if you continue to press these lows, by the 3rd low, I think you're sending kind of you're shining the most attractive signal to the market after you've swept this and this. This should be, long entry. This would be more commonly long entry criteria. So if you end up rolling back at this point, I think that, a good amount of positioning that accumulated within here that was not shaken out with any stab, or was refilled, or was, or did get active for the first time, that at a break of that low is, instead of, it's not 19.2, it's 19.1. A break of that, I think you just see a further puke down to 18.8. And again, the highs are pretty clean. Yesterday, leaving behind these highs, poor high today. So acceptance above this level. There's not a whole lot that stands in the way, honestly, of a pretty swift move above this high into this gap. So the single prints are actually right here. And you had some, like, anytime, a lot of times, you see selling like this come into the market. Again, you should just have an idea of what norms are. What kind of like stands out in terms of abnormal volume into a level. And if the market doesn't continue to move down on that, a lot of times it's pretty decent long or short in of itself. If the market is ripping up and you've had, sort of a 3-drive structure, and the fine is kind of that capitulatory buying volume, the same way this is selling volume. And, just look at the amount of volume that came in on these 2 rotations. This is the delta. So a lot of times you could just fade off of that alone. If the market is now put in 1, 2, this is the 3rd low, and you've had this kind of spike in activity, this kind of selling, reclaiming that level, or, a lack of an immediate continuation off this is something that's often decent to fade. You probably see that your oversold indicators on the low time frames are there as well, or are oversold rather. But yeah, this kind of just looks like it's rolling over. I don't think there are any real obvious divergences besides ones that occurred on the long side. So, if you look at this locally, and And I'm just going to drag this up so it's more obvious. Scale it a little bit. Here is your price action. Okay, so I hold control to move that. There we go. I've gotten more comfortable back on Sierra now. It's a pain in the ass to relearn everything. You know, the only real absorption that you've seen is on the long side right here. So price making lower highs, CVD making higher highs, and then ultimately this big puke as those are wiped. Let's get a bit of a higher time frame chart and see if anything stands out as more egregious than that. Now you had a significant wipe of the OI that came in at the high so far. I think it's around half. Most of that began around here though. So this is where most of the buying started coming in. And if you look at an open interest chart, it started from right around this low. Just trying to scale this again. Slight delta divergence up here. Nothing major at the lows in terms of divergence because you are, sorry, every time I press a hotkey, it pulls that up. You are making progress downward and CVD is making progress downward. So it's not like we have, you know, best case scenario would be either CVD is completely divergent against this. So you see that at least towards the moves at the low that sellers are not as interested in selling lows anymore. Or, you know, the case of sort of equal lows across the structure and much more obvious delta divergence where we don't have that. So again, I think that this is just setting up for a further move down. Maybe it'll happen during the stream. Yeah, I mean, you had a significant amount of selling that came in down here. And if you have this much positioning exchange hands, and for those of you that are interested in seeing the studies, so that is volume, right? And then I have it the coloring based on volume, ask volume, bid volume percentage. So this is showing you the total volume. So if you have that much positioning exchange hands, the last thing you want to see is that this level's lost, right? If you're making a case to be bullish, you know, whoever absorbed this amount of selling down here, you definitely don't want to see that bid or whoever was passively on the other side of that has to rethink their positioning when we're this close. The best case scenario is always that you see, you know, a bunch of selling come into the market returns to that pocket, and then you have more of that absorption occur, but now price is able to remain bid higher. So I don't often look at high time frame footprints. I've mentioned this many times before, but when I do, I like to just kind of box out where the volume came in. And then this is kind of my new threshold for where price needs to hold. So you could see it as a large clustering of activity, or you could see, you know, individual rotations, individual price points within a candle where, you know, you might have a massive amount of volume transacted at just one level where there was a ton of absorption, and then you're extending, you know, basically just one line forward saying this is the level that needs to hold. And this is this is your 10-minute chart, and this is just a little bit more granular. And I'll show you the bid ask instead, because this study setting. So the study is just the footprint, right? This is just volume, but it's in a 10-minute candle. So I'll show you the bid ask. just separate this a little bit more. So you could see 15 million at the bid, 17 million at the bid, 30 million at the bid, 18 million at the bid. This is all aggressive selling into this low. And you can see that delta stand out. So ideally, the point is, whoever, there was a bid on the other side of this absorbing this. Could be a market maker. I doubt that, that single quantity transacted into a market maker alone, but someone providing liquidity, someone in the limit or using a limit, right? So in the bid. So if price comes back down to that level, imagine how you feel when you buy, when you bid, right? And price returns to the point where you were just filled. So as I mentioned, I now want to see that this cluster, so I don't like to have it as this breakdown anymore because Sierra does scale a little bit differently than something like EXO, and it makes it a pain in the ass to show the actual text. So now something like this cluster down here, I just said 19.2 when we're looking at the higher time frame chart. I want to see that this is able to hold. I don't want to see that any kind of passive buyer down here is, their resolve is tested. Ideally, absorption should happen continuously higher, right? So if this was the level where you saw a significant exchange of positioning, you want to see that the market, when there's when there's more selling coming into the market at this point, that the market is able to remain bid, and it's not just moving sideways around this region now. You want to see that it's able to stair step up, right? So if this was a low that was heavily sold into, you want to see that there's still aggressive selling coming in, but now price is able to remain bid above that prior selling. Just consider that all of this is positioning that's coming into the market and leaving the market also. Obviously, there's positions being stopped out. But the more positioning you build up, the more likely that a break outside of the pocket, right, and this is the pocket we're creating right now, the more likely that a break outside of that is going to lead to a larger move, right? This is the concept, but again, a more atomized breakdown of it because you're looking at volume. This is the concept of compression. The longer that we compress and move sideways, the more positions are likely to build up, and then the more likely that any kind of subsequent break is going to be violent. And it's because of this, right? It's because of the amount of activity that's coming into the market. Now, it's not the case that, if you move sideways always, that you're always going to have a large buildup of positioning come in. But we can see that this was, there was a decent exchange that took place. Oops. So this is a better representation of it, right? When I say positioning, it makes more sense when you understand that it wasn't just stops being ran. So for example, here's a spike into the low, and look at the open interest after this has happened. So there's a bunch of people that have come into the market after on the long, on the short side. All right. If they're short and fading this, they're not going to be too comfortable if the market breaks back above. If they're long and they're getting involved after this, again, this third drive, if they're long, if the majority of this is aggressive long behavior, well, they're certainly not going to be happy if we come back below where this originated, which is actually slightly below 19,200. So I said 19,002. So it's more like, what did I say? 19,120 when I corrected myself earlier. So we did see a significant amount of positioning come in. I think it should be kind of obvious that this was a good amount of long stopped out. So that volume that we saw on Sierra was a significant amount of longs that were stopped out, and that it's been mostly buying that's come in after. So if we look at the red CVD is the Perp CVD. If we look at aggregated predictive funding, this is weighted by open interest. So this is new. Coinalyze added this morning. And this is something that was only available on Levitas. So now this is the funding weighted by open interest. So it looks like there's a significant amount of longs that jammed in right here. And that's fine as long as the market is able to hold where they came in. Again, going back to, I mean, I don't want to turn this into a classroom right now because it isn't. And I don't like to look at high time frame footprints too much, but all of this positioning, this can come into the market, right? You could see this amount of activity coming in on a rising open interest or a declining open interest. So if it was a declining open interest and you had this spike up, you might say, okay, maybe some longs are taking profit off of the low buy, but more than likely it's shorts that came in that are being stopped out in the reversal. But instead we have a bunch of activity coming into the market, a bunch of positioning in this move up, and open interest is increasing with that. And you see that funding is more positive. So I think that if this ends up breaking below this low, that I would like to, hey guys, I have this other screen set up. So if we do get the break, one sec. If we do get the break below this low, today's low, I'll probably just pound it short. And not just a break, right? I want to see that ultimately the best thing that you could see is one of the best things that you could see if you're going to be kind of selling a breakdown and you don't want to get smacked in the face, is let's say we approach this 1910 level. All right, so here's the pivot. Let's say we end up coming back down here. If this is going to be a swing failure, and absent context, right? Absent the market having stabbed this low now for the third time. If this is going to be a swing failure and we return back to a level that we spent some time away from, ideally what you would want to see if you're going to get long is that the market taps this level, triggers a bunch of activity below the level. So you see a bunch of red, right? You see a bunch of, in this case, red, because I have it set up that way, but it might be different for you. You see a bunch of selling come into the market. You see a bunch of long stopped out. And then when that pocket of volume comes in, the market is able to trade back above and hold the level. And then you would want to see, buyers start lifting offers out of that. If a breakdown is happening in progress, a lot of the times, especially when a level has been tapped multiple times and overused, when you come down to this level, you'll see obviously positioning gets stopped out below. So you'll see activity come in, and I'm drawing it like this, right? I think most of you know, because this is the bid and this is the ask. So you'll see activity come in below the level. So you'll see volume come in, but then as a market immediately tries to move out, if you see buying come in, let's just imagine that this is the level right here. You'll see buying come in. That buying will kind of buy right into a wall. So the ask, which is above, will remain stacked. That buying will get absorbed, and then immediately you would want to see that buying is that level that was bought into is lost. So if you see volume come in below the low, so we break down below, buyers start lifting offers, but the level is remaining thick. As soon as we start rotating back down towards the initial spike, a lot of times I'll just pound short. Because then at that point, like if you're just looking at what price action has done, it's put in the low, it's come back to the low, it's bought into it to no avail, and now it's sort of breaking back down towards this, which should have, in the initial spike, acted as some kind of spring if you were going to get more of a snapback. So a lot of times I'll just sell this. My invalidation will be right above that prior structure. And if you can't see on the screen, because I realize that the DOM is in the way, all I'm doing is drawing on this level right here. So a lot of you guys don't have Sierra. But if you want to set your trading view up, it's to get sort of a overhead and mid and low time frame view. This is how I have my trading view set up. So you have a daily chart, you have or a high time frame chart, whatever you want. You can switch between this and the weekly. And then I have my 30-minute or my hourly, just for some local structure. And then you have more of a granular, either 1, 5, 3, whatever you want to use. So let's take a look at some alts. And there's another trend line too that we've been respecting recently that could offer sort of a similar, offer confluence to a similar level we just talked about, which is that 18.5 level. So we had the 20,005. So just for larger swings, thinking of these 20,005 back up to, what did I say last stream? 21,500, 21,700. And then we just said earlier for a bigger move, 18.5. I mean, more locally, you could see that we have been respecting these higher lows. So any kind of break outside of that also, I think, just sets up to that 18.5 sort of range low retest. Just because it indicates that, and it's probably better to look at it on a higher time frame, a lower time frame chart. And you probably, actually, you can't even see this line. One sec. There we go. Because this is the level that we've been just walking up since. I mean, we didn't come here all the way earlier, but there's a little bit of confluence again between this prior range and ultimately a trigger point for a breakdown short that lines up with today's low. More reasons to sell. That's what I mean. I'm kind of, I'm still worried though that a short like that, so any kind of selling, this is the daily. Let's look at the weekly. Any kind of short, I think I would be happy to hold into this low. I would be worried about holding it with greater expectations. Because, I mean, if you just looked at my trading view chart, there was a different lineup. And that was based on a drawing of the weekly and daily chart. So just expanding this real quick. What happened there? There we go. This gray box is not the composite that we established on Sierra. This is a weekly level and then a daily level. And this is just that cluster sort of boxed out. Whereas the box on Sierra chart is based on a composite. So my point is, just to clarify, and I'll draw it on the trading view chart. So for those of you that don't use Sierra, my point is that this is the larger zone where I still would be very careful shorting into, even though there is like I said, a short opportunity that I think exists between today's low and 18.8 for that larger composite. So again, that's based on this. So from here to here. My point is I don't want to assume that this breakdown, that this just, take this for granted, this move leading to this. Because I think it's dangerous to short into these lows still because, unless the S&P is falling off a cliff, Bitcoin has been holding up. Surprisingly. But in the past, that's only led to just putting off the inevitable, right? Let's take a look at some alts though. So XRP is a great thing to trade, not something to invest in my opinion. But this has been really active and outperforming the last couple of weeks. I mean, just look at this chart compared to something like BTC, compared to Ape, compared to even Binance, ETH, everything, right? This is this is the best crypto right now, as funny as that is. High time frame first. I think that it's dangerous to assume that this has much more, right? I mean, you have people talking about $1, like these weekly lows. That was the most important level for, over a year. We're, very close to that at this point. I think that this probably, this could put in another thrust. I would kind of expect it to, but I would be careful holding with the expectation this has much further to go. This is this is as strong as a support and resistance flip as you would get. And if you look at this on the daily and just look at these lows as kind of a zone as where things might go wrong, it does kind of line up with where we are right now. So we're coming into a pretty sticky area. But XRP trades very cleanly, believe it or not. So like I said, non-investment, but it is very clean. The support and resistance flips, the retest of the levels, offering really technical responses. Just don't know how much further this has to go. Intraday wise, I mean, you're starting to have a bunch of overlap. This is usually how trends begin to fail. So if you've had sort of trend migration, value migration the entire way up, you've had your big spike, and now trading back within prior day's value, this kind of composite, probably another good trigger to lean off of though, right? So something like a loss of 50 or a reclaim of 53, and you're probably getting either another leg or the loss of 50 leading back down to cleaning up this gap. So loss of like 50,000, 50, loss of that probably takes you back down to 49 pretty easily. And a reclaim of the last 2 days. I'll just put this on real quick. Last 3 days. It's right around 53. It's slightly lower, but this is a composite that I have in the background. Change the color so you could see it. So this is our composite value area high, value area low of where 70% of the volume taking place within here for the last 3 days. So a break above 53, probably just target that high again. We haven't zoom out. We haven't even tapped this high yet. Do we need to? No, but do we often? Yeah. There were some others that we went over last week that are just not doing anything with respect to their higher time frame triggers. So APE, multi-week composite, multi-week balance, still within those prior weeks. So we talked about this one big week and all of these weeks that were unable to close outside of or did maybe just 1 week, but completely lost that and fell back within. So this weekly bar right here, that's what I'm talking about. This is probably a pretty clean trigger. Lines up with this running diagonal as well. If we're able to accept outside of 6, I think that this probably leads to a move at least up to 7 something. So back up to these highs, 780. But still kind of dead smack in the center of that. So no reason to get in position here unless it is for some kind of local setup, because you probably have inside days and value overlap. So we have definitely inside days. Inside days for the last, well, not really, but it's close. This last week, right? If we looked at this put profiles on this, there's quite a nice composite that's forming between, again, it's right around, this one's around 510 and like 545. So I think given that, I think with this, you just want to go off a market structure, not just the composite value area high. Given how tight things are, so you have one big day of dispersion and then all tight days to follow. A break outside of this range, so 540, probably offers you at least a visit of these highs locally. So, you know, a 3.5% move, 3.5% move, just level to level plays. But high time frame wise, this is not like, you can't look at this chart. I mean, you could say, hey, maybe this is bottoming, or I don't know. I think it's really dangerous to say anything like that with alts. BNB. Falling back within this diagonal. Still within a multi-week range. Bunch of overlap still. So, I mean, it's no stranger to you guys. You realize that the market is just compressing week after week. Let's see, what else was compelling? Matic still holding this line. This was kind of a high time frame level that I had said previously that if we break outside of this little SR flip and flag, I think would at least take us back up to this high. So right around 94, 95. If we are able to hold above something like 85, 86. So at that point, you're breaking above the flag, outside of this diagonal, and I think that you have a, when you scale it a little bit more, it looks more attractive. I think you have a move that can take you up, 10%, 9% move. So the point is, if this is some kind of flag that's forming, break outside of this, holding prior levels, your market's putting in a higher low, and then this running diagonal sort of governing the progress, the entire structure. If we're able to put in this structure and then hold something like 85, 86, I think that you've sent a pretty clear signal, at least in the short term, that this is not done putting in legs to the upside, at least locally. Solana still within its kind of box of boringness. That's what we'll call these. Jeez, look at this. So this is an inside week setup right now. So we'll line this up because this is so this is an original box that I drew, right? Because of all of the balance that we've had the last couple of weeks, even though if you look at it on the lower time frames, obviously it's not balanced. You had big moves up, but highest weekly close, lowest weekly close. And now we have an inside week structure. So I'll label this one trigger, make this green, make this red. Okay, so these are equal lows right here. Normally, a break of, so again, this week right here was completely within the prior week structure. So normally, on a daily inside candle or a weekly inside candle, a move outside of the prior week's high takes you at least to the next sticky point, which would be, I'll zoom in a second to show you, but it takes you to at least the next sticky point. A lot of the times for a daily inside structure, if this is, a daily candle, and then this is the inside day candle, and then here we are today, T for today, the inside break to the upside usually takes you at least to a minimum of the prior day, and the break to the downside to the prior low. So This was the day that closed out inside of this candle, and the break of the high or the low takes you to the prior day's extreme. So with an inside structure like this, it's the same kind of idea, right? If I zoom in on the daily, the setup would be, break of 34.48 leads to a move that you could pretty much take for granted up to, 35.45. So around a 3% move. The break to the downside. So let me just label these so you see exactly how close this is. Again, we'll just put this one here too. So that would be your TP for the inside break right here. This is obviously so close, right? These are like equal lows. I think that this entire structure, right? There's an inside day and there's an inside week. And then there's just noticing the obvious, which is this is just compression, and any kind of break of, I always, I reiterate this point, anytime that you're really compressed, buyers getting involved here, sellers getting involved here, prices marking up, not marking up or marking down significantly at all of this positioning is able to remain. A lot of times it will. So when you have inside structures, it just means that just imagine that, your stops from here are still good. Now stops have been able to be defined even tighter. So any kind of break of local stops lead you to the next set of stops. And if you have a bunch of these accumulated, it's going to lead to a much larger move. So some kind of cascade. So the point being, I think that if you make a strong move that is able to close outside of these levels, right? So a daily move above, let's say, 34.50 or below 30, we'll say 31.60. I think that's going to lead to your much larger move down to these lows. And if we ended up breaking, let's say to the upside, up to the next significant level where you might expect people to take profit or to run into some resistance, which would be 37.43. So the point of me saying this is, like, intraday textbook wise, you would say that, it's going from point A to point B and that's your target. But I think that if you accept above point A, the chances are that this overthrows much higher. And I think that if you accept below negative A, that this goes much lower than just the near next target. Closest next target based on what that textbook setup would be. So again, all of this positioning, not really tested much. Sure, you have some moves up, some moves down, but a break that's clean outside of this structure is not going to be something that just goes with a whimper. You'll get a plunge or you'll get a much larger expansion up. All within, again, mind you, this is all just a larger range right here. So sushi. So sushi is interesting because Avi Fellman of Golden Tree, he's been part of Golden Tree now for I think the last 6 months. Very large asset manager, multi-billions. I think probably, I want to say maybe 4 billion. I could be wrong. Could be way more than that. But I know that it's north of a few yards. Picked up a position in sushi, and here's the thing. They picked up a $7 million position. They bought, I think, what was it, like 4 million or 5 million sushi? I don't know, whatever the math was at the time. That's great. I always I just think of things in terms of some of the larger traders in this space. Like an asset manager makes a public statement about picking up a position in sushi. That stands for something, but it's funny when individual traders who have had larger positions in alt than that, and it hasn't meant anything, right? It hasn't saved the alt. That's my point. So that's great. Them putting their name as a, major player in the traditional space as well, dabbling in crypto now, not, obviously more than dabbling. So that stands for something, right? There's some kind of signaling there, but I don't know that does anything for sushi. I don't know if that has any kind of lasting effect. Like, you need more people to show up and buy. But Sushi technically, there's a few things that line up that, in my opinion, make this possibly setting up for make it attractive as a candidate for something setting up for a much larger move. So you have this running diagonal right now. We haven't been able to find our way outside of this for the first time, right? This is the third test, spending a good amount of time around this level. And while we're doing that, we're able to hold a local high on the weekly and the daily. So weekly close, market structure is still in a downtrend. Weekly close, lower weekly close, lower weekly close. These lows, though, are really nutty. These are like, I made a joke and I said that these are like central bank established lows. Like, they're trading so cleanly, it's almost like it's not crypto and it's like it's treasuries or something. And they're not, obviously, they're not that precise. Like, each one of these lows is slightly different than the other. But look how flat this is. Now, did Golden Tree buy all of this, and they've been buying and providing liquidity down here the entire time, and then, make it public after the fact? Obviously, yes. Are there a bunch of other people that are picking up this, thinking that this is a much larger bottoming structure? Yeah, it looks like it. Now, where are they likely to take profits? Are they large single traders, again, in a thin market now? Just mindful that now we're 30+% off the lows. A big move has already happened, right? So if you bought down here, they could be very well looking to take profit soon. Not Golden Tree, but anyone who helped put in this low. So that's something to consider. Like, yeah, this is really attractive, but also it's well below us now. As far as local trades go, though, this is possibly, right? So now we have a higher high on the daily and on the weekly. So far, we have closed out a higher weekly. I think that as far as just like market structure goes, there is a setup between, and this is a swing trade, right? Which we haven't had, I don't cover too many swing trades. Talk mostly about like how the high time frame looks. Possible that we have some longer term trades to take advantage of, but we're in a bear market. It hasn't been that attractive. You either bought lows or close to lows and hopefully sold at some point. But holding this daily level, and we're kind of holding it in a semi-decent way right now. It's just kind of flagging. A move, and this is clean, right? Whoops. I'll leave it like this. So I think that that's reasonable. So I think that, this is, you don't often hear me quote like 4-hour chart and say it like this, but I think if you have a 4-hour move that closes above and outside of this, it's kind of like we're flagging above this structure. This is the retest of that structure. If this was going to be a failure after this kind of highs put in, you have this 3-drive structure, you should have seen it already start moving back towards these prior lows. Like, this is like how obviously most things have happened in the bear market. You've had rallies, but then you start rolling over on top of the local structure and those stops get ran and there's like no one that steps in anymore, right? It just becomes written off as done. 47 billion. So I was, by a factor of 10, I was off. Move like that. So something like, we'll say like 140. Acceptance at 140, around 140, outside of this running diagonal, above this. Again, going back to just keeping things simple. You're bullish or you're bearish, you got involved up here. It doesn't matter. If we're back above here or if we're back below here, it's very clear which side is in control, right? And what side is about to get pushed into the furnace, right? So just assume one for positioning within here. A move outside of the extremes makes it very clear who is wrong, right? Especially if you're able to sit and hang out above. Again, what was it? It's like 139.3 or just say 140. So holding this level, I think we're just looking at another move up to 150. And I think that this has it has some possibly has some momentum from that golden tree positioning. Not from them, excuse me, I'm eating a pumpkin muffin. Not from them continuously buying, but from the sort of wake that they create, the follow-on sort of pile-on effect. Now, this could be wrong, right? I think if you start seeing weakness below 130, 133, excuse me, I think you have to assume that this probably comes out and retests this level sooner. I think overall, like, excuse me, pumpkin muffins are really good. I think it's very slim chance that the market is, this is going to start moving up much further. I think we're thinking locally, but we're also like happy to have larger trades that are local. So 9%, and most of the trades I share are like 2-3% for intraday. So if you have a move like this, it'll have some momentum. That's great, but I still think that no matter what, whether we're there or here, chances are pretty high that you fill out these kind of very one-sided moves. We're in a bear market, right? That's just, if you create a gap, you're likely to come back to it. You're lucky if you don't come back to it for a long time, but more than likely you come back to it shortly after. So the market has a tendency to fill out inefficiencies. And there's going to be more inefficiencies now because the market is not as thick. Okay, so if they want to be involved in governance, they have to buy more. Good to know. And listen, it's not like you shouldn't buy into a rising market, right? There's many times that, a lot of times, like traditional asset managers buy into a rising market, and they will only buy into a rising market. So you shouldn't say like, I'm not going to buy into a rising market or sell into a dropping market. A lot of times it's the opposite, right? QNT. So a couple of friends of mine have been talking about this. Unfortunately, as they mentioned it to me right now, it looks like it's already put in the bulk of its move. I mean, I haven't looked at QNT, but if I was looking at this, obviously, even before I go down to low time frames, you guys know that I'll map out the higher time frame structure. I mean, weekly level, the most important weekly level. Just look at the amount of confluence between this region right here, these lows, and these highs. So going back, this was the most technical and significant of SR flips. This was a weekly pivot. Right? Most people the weekly pivot is the final, right? The final arbiter of judgment for what the trend is. If you've lost it, if you've reclaimed it, there's really no arguing against it. So this SR flip right here is kind of what we're tapping into right now for the first time in almost a year, right? Very long time. So the chances that this just continues a trend through here, very slim. Instead, just kind of the same play as you would if you were trading any kind of ranges. Okay, we're in some dead space right now. So dead space has a tendency to fill out. So this was an inefficiency. Big spike down, very one-sided. Refilled that, retesting that region, tapped it, didn't even tap that high though. You can see that price has spent a lot of time between 95 and like 135, but has not spent much time at all, obviously, between 170 and right around, what is this, 137, 135, 140 region. So let me just make sure that this is in view because I see that the watch list makes things a little bit more off the margin. Consolidation, dead space, not retested, nothing. So that being said, this would be like the last area I would hold long into. I mean, at this point, you've tapped both highs. You're into that weekly structure. You're into a very thick area of market structure. Just put it that way. You know, from a POC standpoint, I bet there's a naked point of control somewhere around there. Let's put on the higher time frame profiles. So the thickest point is a little further up. That is a quarterly profile. Monthly profile. So depending on your tick settings, this is where it's going to make a difference. This is the monthly composite for this level, value area low right down here. And then here's a high volume region. And then here's the highest volume region of the next month of January. You could just imagine that there's no real difference, right? This is the highest volume region because it is just slightly higher than this one. It doesn't make this any less relevant when the market comes back to it. So this is the naked POC. You know, if this was higher than this, you'd have a naked POC here. You don't need a naked POC to know, though, that that's a sticky area. So that, again, 170, 172 level is the last level you would want to hold a position into. And at this point, the market is kind of speeding up into that level. One sec. Not really, you know, we have one, there's not much sideways activity locally. So ideally, if you're, you know, bullish on this much longer, you want to see that the market is able to base out around 149, 150, hold this level before, I don't know, I think a better, a more attractive swing long would be somewhere starting closer to here, and then again maybe targeting that 170 region for a fresh trade, or maybe something along better. Even better would be coming down this level, tapping that low, and then reclaiming the top side of the structure. But I think the more likely scenario is that maybe you get an exhaustive push up here, and then we're coming back down here, filling this out, and that we end up coming back down here, filling that out. Not sure why QNT is going to go on its own bull market without the rest of the market. You saw how that worked out for ETH. ETH is just as ugly as BTC right now, if not slightly uglier. So ETH BTC chart. Flag after a big breakdown. Again, that's against BTC. I'd rather look at that from time to time, see if there's any kind of glaring relative strength or we're near any major levels. But other than that, I'll just chart against USDT. Same thing as BTC, though. I think the setup with ETH, though, is the chance of further downs, or the play longer, lower is more attractive. So I said with BTC that there's a local setup, but I wouldn't want to hold it much longer beyond 18.8. So for a intraday trade, again, remembering we're here back within a multi-week composite. 18.8 would be kind of my extreme of where I would take profit into. I wouldn't hold this in anticipation of this breaking much lower, even though it absolutely could. I think I would still gladly short these lows if it came to it, though. So I'm not going to hold between here and here. But if we broke below this low and we ended up holding below that and showing signs of acceptance, yeah, then I'd be willing to short again. It's just that between here and here, I mean, you can see it on the chart, there's just so much muddiness in terms of price action. I think it's dangerous to write off the idea of any kind of trap setting up where you do have something that does that and then rips back up. So got to be mindful of that. But with ETH, I'll leave these monthly profiles on. This composite down here is so clean. That's 12-hour chart. We'll put on the weekly. Okay. Just some weekly levels. So below us, this zone, so between 1200 and 1245 opens up. That is the top of this structure, right? This kind of consolidation, again, the idea of the consolidation, breaking outside the consolidation leads to a squeeze of any position that got involved. The break of this to the downside, and I'm going to try to make sense of how I started this, how this has a longer short opportunity. The break of this to the downside, and we're still well off of the higher time frame lows. And the break of this to the downside takes us back within this range that's done a really good job so far, the top side of it, as acting as support. But, you know, as I said, going on a couple streams now, if this is going to act as support, you don't want to see that you're spending all of this time around this response, right? So one big move, I said it in a previous stream, it's not an engulfing, but it's a really strong response for the daily after this red day. But we've spent all of our time within there for the most part, right? So not exactly the best kind of low. And if we're able to break below this low, and we're breaking down back below, you know, 1250, 1230 region, I think that chances are that this has a much more precipitous drop ahead. So something like 1230 to, you know, 1070, which is, you know, your naked POC. And then it's just a high volume region. Chances are, actually, I mean, just because of this, the size of this structure, it's not like it's massive, but decent size range. Chances are that, I just want to get this precise. I'm going to use all one color, and I'm going to take off some stuff. Okay. Chances are you see the range play out from, or with a move from the high to the mid, so the halfway point. So 1120, and then you have 1,000 as the next target, high time frame target. So my point is, break it down maybe a little bit more, or I will break it down a little bit more. If we, if the market accepts back below into the structure, and I'm shorting, I'm probably looking to take profit around the halfway point. And it does line up with a, you know, it's a high volume node, right? So between those levels are where it thins out. So just the middle of the range is an area where you could usually expect some kind of response. It doesn't have to be the high volume point. A lot of times when the market's moving sideways long enough, it just happens to be, though. So if I take off this, these profiles, and I put on a composite profile, the highest volume region, we actually have that previous bar. I don't want to include that. So I just want to include the range, not the breakout or break in. The highest volume region is at the top of the structure. The next highest volume region picks up right around the midpoint. So I mean, this is not a perfect example, but my point was, a lot of times when you have the market moving sideways long enough like this, and it's a clean range, the POC is usually going to be distributed right around the center. You know, the idea of balance, if you have multiple periods of balance, that implies that your structures are looking like this to begin with. which implies that the point of control or the fair value region is going to be more oriented towards the center than an imbalance structure. So S&P bouncing this morning, but in the red. And just ETH intraday. BTC does not have an inside day. Like I said, it already broke and satisfied that. So this was actually an inside day that already took place. So this is a good example. This was before the stream. So here's an inside day. Yesterday's high, yesterday's low. We'll just leave the red because that's the trigger. And the target ultimately the prior day's low. So now we have those days marked out, and you could see how that took place. Right, so this is today. Excuse me. Let me just make sure that we're lined up. This is the 10th. This is today. I should put on my sessions to. Oh, it's because I'm on a 15-minute. Give me 1 sec. I'm talking ahead of myself. Session. Oh, it's wait. Why is the fuck? Oh, because I'm still linked onto the daily. If you're on the daily chart, you can't see the session on the options. So there we go. The what's it called? 15-minute chart is making me look at this like it's all one day. Here is the setup though. This is the prior day's low is right here. Again, it's an inside day. It's inside of the prior day's low, and then the high was as well. So both sides. And this is the break that you had. So again, scale this. Hold on. Here's the low. Here's the break of that low. So you get a brief shuffle around this area, spikes through, right? Initially spikes through. You get a retest of that level. You could sell the retest. You could sell the breakdown. It's obviously a little bit more risk involved in selling the breakdown. But the point is your target, your entry is here, and your target is that prior day's level. So you can see that you had a response around there, and that's actually where the market pivoted. But going back to ETH, because looking at ETH intraday, that setup also played out. ETH is more or less doing the same thing as BTC. Right, we're seeing the same sort of drift down. Just look at the last couple of days. Overlap. A little bit more expansion outside of the prior 2 days, but hanging out below where most of the volume is coming in, so below the point of controls. So if we were to put like a an anchored VWAP on from the high, and we'll say from the breakdown of October 7th, you should see that the market is still hanging out below that. And it's probably going to line up somewhere with these highs. Put that in red. I don't know why I did that. Okay, the 7th. Okay. And see, lines up. See, you do this long enough, you can kind of guess where shit's going to be pretty precisely. And it's because you see the points of control. So that's obviously the anchor. The VWAP is just it's basically a volume moving average. So breakdown, think of off the high, breakdown. In the last 3 days, the bears have been in control. We're able to hang out below where most of the volume is getting involved. So if you've been a buyer, you're obviously in worse position. If you imagine that this line is where risk has come on average, well, then on average, buyers are underwater. I mean, it's, listen, you don't have to use this tool to figure that out. You just see that you're below where the last 3 days were. It's clear that there's no shift in control that's taken place. It's notable yet to say that bulls are in control, right? But again, this kind of, I think that, this should be the low, right? You should see the low and then the market able to reclaim either, a prior day's high or, back within the top side of value which would line up with this anchored VWAP. But you keep pushing this low and this is going to spill. My point was ETH has, I think, further down to spill. But just to bring this full circle with the level and using an anchored VWAP, this is on BTC now. So if you're on different exchanges, you're going to see, obviously, it's going to be different because different exchanges are going to have different volume. But if we look at like Binance, which is going to be leading price discovery because it's where most of the volume and open interest is, same thing. So spot, futures, index, okay, it's the same idea. Bulls need, and this is going to be, even if you're trading just based on market structure and you're not using any kind of volume analysis, you'd be looking at this kind of the same way. All right, 1, 2, 3, clean consolidation. If the market's above this, right now we know obviously there's enforced from a volume standpoint as well. If the market's above this just from a market structure standpoint, well, it's probably going to clean that gap up. And you haven't had any highs taken up here. So that's why I said it's dangerous to be aggressively short, because there's no reason why this can't do one of these things. The only way that I think that that's kind of off the table in the short term and how you have to be high time frame focused downward is if we break below these lows, right? 18.4, 18.5. But shorting into this region is dangerous, unless, again, like I identified, the brief trade opportunity that exists based on a prior composite. But other than that, it's like, you're playing with fire, getting aggressively short based on the market kind of doing nothing. Now, the interesting thing is as the market's drifting downward, open interest is going up. So overall, the market's drifting downward. For a brief period here, funding was going negative. So this is my point. Like locally, maybe longs got involved, but there's definitely shorts that are, the tighter things get, and the more you start drifting when things are getting tight in one direction, the more likely you're going to get people coming into the market that are trying to anticipate a move happening. And if you're drifting down, right, and you've been funneling like this, I think you're going to, this is why you set up for those really nasty whipsaw traps, because the trade starts to look really obvious and you start bringing in positioning. Next thing you know, market does one of these hiccups down, pulls in, the last bit of shorts that are getting really aggressive, and then leaves you with something that rips back in the opposite direction, within the next 24 hours, right? So we've seen this many times before. That's why it's dangerous to play these drifting moves, because of that. But I think there's a few reasons to assume that we are, I hate to say it because it's been said way too often recently, we're approaching a point where a big move is on the way. And I wouldn't necessarily, you don't need to get involved right away. So that's a thing too. Yes, now the S&P favoring lows. It looked like we were. You don't have to get involved right away. So again, just looking at the daily, like if this is doing, let's say we do something like this, and we're outside of this, and we have daily presence above this diagonal and now above local market structure that is pretty important, I don't think this is a thing where you have to get involved in the first 5 minutes, right? I think if we're having, imagine, high time frame wise, you had a shift. Now the market is basing out higher. People overthink how fast you need to get involved to high time frame moves. It's a high time frame move, right? It's moving slowly. It's not going to change direction slowly and then do the rest of the move all at once. So you actually can be pretty patient about high time frame entries when a lot of things change. The point is you have to be able to identify that a significant amount of things have changed and that overall direction is changing. It doesn't necessarily mean that overall speed is changing. It's just more likely that when you do break like the major, what has been defining criteria for it, the compression, it's more likely that in the short term you do get some kind of big expansive move, but then it's not, it'd be very unlikely for this to just continue like this. You should expect that, all right, yeah, maybe market structure breaks violently, but then you're going to get over the next couple of days some kind of pullback. And just because it's been some time now, this level is something we went over 2 streams ago. It's based on this gap up here. Remember the stream where I couldn't figure out where the candles were because they weren't loading? 24, 25 region. It's back within this structure. So that setup is one of the cleanest setups. And remember, this is the point of, like, you don't have to be in the trade from the beginning. You step away from your computer, you come back, and the market is now finding support at 20,600. All right, well, you missed this move, but who gives a shit, Now you have a really cleanly defined move that is, I would say, the probability of this occurring is much more likely than you just assuming right here that this is occurring. The relative volume tool that I use, this is just RVol. Moving average 50, look back bars 30. And these are my settings for volume. Has a lot of other stuff, but I kind of like to leave that shit off. And as I've said many times before, you'll get a feel for what kind of volume stands out. That there's some amounts of volume that if you told me, if you were going to say, like, you can't look at a chart, you could only know what specific, what levels were important. And if you were to tell me price is at the level, this amount of volume came through, do you want to buy or do you want to sell? So a lot of times when, based on the amount of volume, if, again, like I said, if price recovers shortly thereafter, that amount of volume alone is oftentimes enough to just fade, because you don't often see that the trend will begin with that kind of volume unless it's on the back of some kind of catalyst. So if you had the market break down and 300 million is thrown into the hole and there's no news and it's just stops ran and it's panic sellers, well, I'm 99 times out of 100, I'll be fading that. And don't think about the 300 million number. I'm just using that as an example. If you say we broke down, the delta is negative 70 million, 100 million in this short time frame, and it's because Biden just came out with an executive order and they say that some cryptocurrencies are going to be banned, and you can imagine what might be something that is the beginning rather than a move that you can fade, meaning the beginning of a much larger move to come, and you still have time to sell. Same applies to the in the opposite situation to the upside though too. No news, market structure, we have clear highs there, ran, bunch of volume comes in, stops get run on the short side. There's no news about an ETF, there's no news about the Fed pivot. Well, that's probably something you could fade because that amount of positioning is probably going to get hunted. So having the understanding of volume so that what relatively stands out is important. And then there are a bunch of indicators that can help you identify that. You could begin to set alerts based on that and so forth. Like a bad sign is when the market is beginning to put in a larger move and there's not much volume, right? At least a bad sign if you're looking to fade. If the market is able to move down on light volume, then there's obviously not much standing in the way of it, right? There's not much that's required to move the market down if there's only a little bit of volume coming in. A lot of times you'll see a lot of volume begin to follow that. Same thing could be said to the upside. Like, people look at volume, I think, you want to see volumes increase overall, bigger picture, But if you see a lot of volume transacted, it means that there's been a significant exchange of hands. And if you see a lot of that volume coming in and then there's no longer any kind of progress made, either based on time or based on actual market structure, if you're using like tick charts or volume charts, not volume here, but volume-based rotations, if you start to see that a lot of volume's coming in, but we're making less and less progress, well, that volume is not necessarily like, oh, this is volume coming in, confirming the trend that's about to happen. That volume is, oh, this volume is getting trapped. Oh, this volume is a sticky bid, right? Clearly, they're big enough that I'm not going to fade them, right? So I think people confuse the way that they look at volume, and they think of like high time frame concepts of a big trend moving up on low volume, or a trend beginning, big shift in market structure occurring, and then overall average volumes going up, things you want to see. And they confuse those with like looking at volume spikes. And it's like, no, when you see a volume spike that's abnormal, absent any kind of catalyst, like I said, that's many times you could define just trades off of that alone. And especially if it's through a level. So especially if it's through a prior pivot high or pivot low, and then you have some kind of evidence of what I see in the footprint, right? But looking at a volume chart, it's like, okay, no, a lot of positioning came in through this one level. Now the market's back above the level or below the level, and clearly that positioning is going to get squeezed out, or you could begin to imagine how that works. The reason I switched this was because I'm going to just look at the chat. But, ow, got a Charlie horse in my leg. I want to keep an eye on this, because if this ends up being the case that, there's a breakdown during the stream, I want to be able to sell it. So this level right here is the low, where you want to see either an immediate response, which I don't think necessarily would happen because the low's been tested multiple times now. I think this is just looking at rolling over. But ideally, if this happened right now, we would see that it comes below the level, buyers come in. You're going to have both sides transacting here, obviously, right? You need a buyer for every seller, seller for every buyer. But if we do have that immediate buying response and the market stays there and then begins to drift lower, I will just slam the sell button. And what you'll see is this is the DOM, right? And I will just market into this. So instead of, this is how it'll happen, we break below the level, and I will be taking from liquidity. So I'll just be clicking right here. So you'll see, imagine I just buy, say I want to just sell one Bitcoin right now. So I just sold one Bitcoin, all right? See how that's highlighted? Now I'll just flatten this, see how it's gone. So if we break below that level, then I will be selling 20 BTC. And the inverse of that would obviously be if we break, I think if we break above the highs, I'd be looking to get a little bit more long. So any kind of move down, any kind of flush of stops, anything that's not gradual where I'm expecting things to pick up speed. So if you have we have multiple lows right here. I think that this has been tested enough. This kind of break leads to a much sharper move. This kind of move is going to be faster and thinner than I think this move. Again, like I said earlier, why I have this labeled the way I have it right now, based on market structure, based on dailies. We had a poor high. These are, so just so everyone's concerned, everyone knows, these are the local days, right? I'm just staying on this screen. Prior day, poor high today. I think the move that reclaims this structure to the top side is a little bit slower. So I think I could probably scale in a little bit more in a position, tag half on our market, when I see what I want, begin to chase it up. That position can be bigger. That positioning can be bigger than selling into a breakdown. So that is something to consider, right? If I'm selling into a breakdown, there are limitations into how big I could actually get into that positioning. So it might be, in this case, good thing I just reset that. In this case, it'll be anywhere between 10, 20 BTC. It was what I'll be scalping with. Just for something that's that tight. Because you have to imagine on the way down, there's not a whole lot of bids that are going to be in the way of me selling into a breakdown. So I'll sell at, 1920 and I'll get filled points lower. This is funny because my watermark, is that blocking me? It is. It looks like it's actually fitting right on my head. I just to show you guys that example of how I clicked and it worked. I reset the entry. There's been times before where I've like reset the entry or the amount. Like for example, now it's on 0.001. That's like the zero out amount. And then you could click 5, and then you could click, plus 10, and then you could click, we want to sell 45 BTC. There's been times where I've like been ready for the trade and didn't realize I zeroed something out, and I get in on the trade and I don't realize like, oh, I just bought, $100 worth of Bitcoin, or I just sold $100 worth of Bitcoin, and completely missed out. So. I don't know. Looks like we're hanging out above it right now. So any other questions? And then I'll wrap it up. We're going on 2 hours. Oh, I haven't checked it out, but has anyone checked out the prediction markets on Phemex? Because I think those are going to be really fun and very binary. And I think that's what makes it cool. It's like whether it's interest rate decisions or CPI numbers or politics or sports outcomes, being able to bet on those just sounds like a lot of fun. Let's see. Using the tape. So the tape is just a footprint, right? But there's a footprint is the memory of the tape. So when it comes to watching the tape, I think the best way I read it was someone recently on Twitter. Let me get his handle so you guys can follow him too, because he's just a great follow. He's when you just know people, certain people are good people. Where is he? I know he likes my tweets, so I can't think of his name right now, but I'm just gonna find one of his. These are my notifications. All right. Let me go to my profile. I remember what he liked recently. 1 second, then I'll get to my point. He's going to be right here because he commented. DCP, so DCP Cooks. He was a CME pit guy, pit trader, traded during the global financial crisis. Big legacy guy. He owns like breweries now and restaurants, which I think is awesome. He's tuned in, I think, a couple times to streams as well. But he mentioned, we were talking about I was talking about the tape on Twitter, and he said you're watching the market breathe. And that's really what you're doing. You're watching the market breathe. So I'm just going to pull up my tapes. I was using Agar, but then I got away from Agar because I didn't really care for it. I don't know. It's a little messy. I only really want to see Binance for the most part. Like speed on Binance is I noticed I used to have everything more broken down between spot and futures. It's not necessary. You're not going to pick up on those subtle changes anyway. Your brain's not that equipped. That's the purpose of a footprint. It's like you're able to see what transacted. You don't have to worry about, building it in your head mentally as you see it on the tape. But you're seeing the market breathe. You're seeing the speed of the market. If you just consider the speed of the market to be somewhat indicative of the interest, right? So the overall interest around a level. If a market is going to move through, if we have a level that is like really important, right? So for example, if it's like 20,500, if I'm saying like that level is really important and we break that level and we're above it and we don't see anything happen, we don't see buyers begin to lift offers. You're looking at a footprint, you're not seeing any volume come in. You're looking at a tape, you're not seeing it speed up. You're not seeing any kind of change in behavior. So the thing about the tape is like, I'm looking at a footprint too, right? And I say the footprint doesn't make or break the setup. It's because a lot of times in my periphery, I have the tape. So you're building this kind of overall view based on the things that are on your screen. And that's why you have to really be smart with your screen setup. And that's why I'm always trying to identify the best way to set up my station. It's something that's probably I meddle with too much, because you find the best way and then why are you changing it, right? But I might tweak things here or there. And I'm always making sure that the tape is somewhere close to my center of vision. And it's because I might not be looking at the footprint. I might be looking at something else, but I could see when this thing changes in my peripheral, right? And it's not, again, if it's centrally located in my field of view, it's not like it's in my peripheral. It's like I'm seeing, oh shit, what's going on? I have certain values highlighted as well. So you could see that values over 6 figures are highlighted. I don't really care about the noise, but the noise being the smaller odd lots, and it's not that they're odd, but an odd lot is a term from traditional markets for small size traders, people that are not really going to have an impact on the market. But small traders obviously do, because during retail manias, they are the ones that have been responsible for the bigger moves. So I don't want to not have the small size because I want to get a pickup on the overall, overall, again, activity. So I can't filter this too much. But then I have much larger orders filtered on the right. So again, if this box is empty in my peripheral, I could see when it begins to fill up. And I know when size is coming into the market, when bigger traders are getting involved, when maybe we're running stops. But the point is, I always have this in view. So I always get an idea right away of, oh, that area of the screen is starting to flash, right? The benefit of using Agar was that I didn't even have to do that. So forget about having this in my frame of view. I could have this all the way off to the corner. It could be minimized, right? But I would hear the noise of Agar ringing, right? I ended up thinking that was way more important. It just started bothering me. I'm like, I got shit to do. I can't hear Agar going off all the time. If a level's interesting, odds are I'm going to have an alert around it anyway to start paying attention. I spend so much time at the screen either way. I'm seeing things change. But I went back to Crypto Watch because I think it's more attractive. I think it's a better tape, and I also know what they're coming out with. So you can imagine that if the selling point of me going back to Agar was sound, it's not hard to exceed that on their end, right? They're going to be coming out with sound, and I think the customization is probably going to be pretty interesting. But that's how I use the tape. Another thing is, again, it is the footprint, right? So you're going to get a better idea of absorption by looking at the footprint versus the tape. But what would absorption look like on a tape? Well, imagine we trade into a level, right? A support level or resistance level, and you're seeing that the level is getting slammed, right? Tape is ripping. Bunch of sizes coming in, right? It's beginning to pick up and crescendo. You're seeing the tape speed up. You're seeing that interest pick up, but now imagine price is not going anywhere, right? So imagine that this is right here, and we're coming into this level. Tape is ripping. Bunch of sizes coming in. Imagine this is filling up because this is just large orders. It's filling up on the long side, and now price is beginning to drift lower, and you're beginning to see the tape slow down. Well, that's usually what absorption looks like. Okay. Desensitize the trading amount of money. Yeah, I think you do over time. I think you do. One, you can't trade for the money. If you trade for the money, you're going to get bored. So obviously most people get involved for the first time or get interested because they make some money. Most people lose it and then they want to gain that back. But if your whole point of trading is the money, you're not going to stay interested in trading. That obviously has to be a part of it, right? Like making a living trading, if that's something that you're able to do. That has to obviously be part of it because you're making a living trading, and making a living means satisfying certain requirements, but it can't be the only thing. Like you have to love what you do. And I guess there's no point in even saying that, because if you're doing anything, unless you're literally doing it for other people, I mention this from time to time because it's funny because of the weird story that got around that, like, I grew up in the Hamptons or some shit. My dad, he worked for his father for a while. That business blew up. Grandfather moved down south. Like, my dad's side family is really divorced. But my dad like had me and then couldn't continue to go after his dreams the same way because he had a kid. So he got stuck doing something he didn't want to do. But he had to do it. It didn't matter that he liked doing it because he had to do it, right? He had to make sure that there's food on the table, that, my brother and sister and I got to do things we wanted to do. And he didn't enjoy doing his job, right? He probably doesn't enjoy still doing his job. I think he retires in like 2-3 years. But the point is, like, if you're going to trade for a living, you can't do this just for the money. You're just not going to be able to stay interested. You're not going to be able to stay competitive. You're not going to be able to stay on your game. Whereas maybe some other things you can. But the idea is in life, right? If you don't love what you do, you're not going to be doing it for much longer. You're not going to be doing it well for much longer. Getting desensitized the amount of money, you just do, yeah. I think after a bull market, everyone gets desensitized to money, period. Unless you've lost it all, I think from a trading perspective, I think engineers probably far better. Unless you're trying to be a macro trader. I think if you want to be a trader, you have to be good at video games. You have to have a little bit of everything. I know it sounds funny, but yeah, I think you have to be kind of a generalist. Having a STEM background and that kind of brain that comes with that obviously helps. Being conscientious, analytical, an interest in problem solving, mathematically inclined somewhat. I mean, exhaustion footprint, that's going to be more along the lines of volume just peeling off, right? So exhaustion you could sort of see in one, you could look at some kind of momentum oscillators, but exhaustion you can see using something like the footprint. And it's when you have divergences where, for example, say price makes a higher high, but CVD, did I say the footprint or the CVD? I meant to say CVD, but CVD doesn't make a higher high, right? Price makes a marginally higher high, falls back down. CVD doesn't make a higher high. Or, exhaustion and selling, price makes a lower low, slightly lower low, reclaims a prior low, but CVD does not, right? And if anything, might be slightly higher. And you just got to look at that as buyers are not as interested in buying, sellers are not as interested in selling. We might have moved up slightly higher. Market makers might have walked it up a little bit. Conditions might have been a bit thinner. Same can be said for making a slightly lower low. Market has a little bit of momentum down still. Market's still a little thin. Any kind of selling still took us down, but overall the amount of selling and the amount of buying was not the same as previously. So it's just a sign that maybe that is beginning to taper off. And if you're looking at individual footprints, then you would see that, for example, individual rotations have, a delta that is going more neutral or beginning to shift negative in terms of buying, shifting more neutral or shifting more negative, volumes dropping overall, participation dropping overall. So, but I'm going to wrap it up, guys. It is over 2 hours. We're over 2 hours at this point. Feel like it's been a good stream. Yeah. So leave a comment below. So I'm going to start doing giveaways for the streams again from time to time. Nothing crazy. You guys remember during the bull market, we were giving away, I don't know, we definitely gave away over 6 figures worth of bonuses throughout the year and all the things we did. But I'm going to start doing that again. We'll incentivize participation because I want you guys to ask questions in the comment section, because the point is I look at previous videos and see maybe what needs to be addressed and, where interest lies. And hey, people frequently say they don't like to go over this, or, they're more interested in seeing this. Well, I'm not making the videos because I want to talk about, every time I start the video and I talk about the high time frame, Any of you think that I really care to talk about the high time frame? It's like we talk about it all day on Twitter. We know the levels that are there. Nothing's changed. No, I do it for the stream because I think that there might be some people out there that want to like touch on that shit. And that's why sometimes you could tell that I'm like not into it and that I seem maybe not as interested in streams, or my attention isn't there. And it's like, oh, well, I spent the last 20 minutes because I've, going over the high time frame because I felt like it was necessary. But meanwhile, like I said, if you guys leave comments and enough comments are like, hey, we don't care about the high time frame, we want to just go over intraday stuff, or hey, can we just do a stream where we cover CVD, or anyway. All right, guys, have a fantastic week. Tomorrow's Tuesday. Tomorrow I trade more on, let's see, I think it's Tuesdays and Wednesdays, or Tuesdays and Fridays. Tuesdays and Fridays, yeah. Tuesday is a big trading day for me. The only reason I trade on Sundays is if something happens well before futures open or right after futures open, because otherwise during the afternoon I am away from the chart. All right, be sure to check out Phemex. The link is below, tradephemex.com. They have prediction markets. They have futures spot. And listen, guys, if you guys are always asking me about spot exchanges and selling your Bitcoin and hedging, you do it with the futures exchange. You don't have to sell your spot BTC. You could just sell futures against it and get flat by being, let's say you own, $20,000 worth of Bitcoin. You own one Bitcoin. You go onto a futures exchange, deposit that Bitcoin, and sell 20,000 contracts against it. And then you're flat. Until then, next time, whatever. Speaking backwards, I'll see you guys. Enjoy your week. Stay well.